Welcome back. People with higher credit scores could end up paying more than people with bad credit scores under President Biden's plan for home buying. Now, the changes are a part of a Biden administration rule, which provides equitable access to home ownership. First-time home buyers with high credit scores would also pay more under this new rule. Joining us for tonight's KX Conversation is Robert Hoff, the president of Mountain State Financial Group. Robert, thanks for being here.
Yeah, thank you, Nick.
So what does this all mean for North Dakota homeowners and future homeowners?
Sure, Nick. Well, the loan level pricing adjustments were originally created to compensate for borrowers who had higher risk relative to lower risk. So people who had better credit scores would pay less, and people who put more money down would pay less. With these new changes, you'll now see that borrowers who have better credit scores will actually be paying more, and people who have worse credit scores will actually be paying less. Now, overall, better credit scores will still be, they'll still be able to, they'll still get better pricing than what the people who had lower credit scores were, but it's more equitable now. So instead of adjusting it from a risk standpoint, they're basically trying to make it more equitable for those borrowers who are less qualified. In addition to that, folks who can only put down less money will also get a break. So there's actually a scenario now, Nick, where it might be more beneficial for a person to put down, say, 19% instead of 20%, and then drop the mortgage insurance later on down the road.
So how are businesses like yours getting prepared for this?
Thanks, Nick, and that's a great question. You know, it comes down to understanding what the rules are. And one of the big things that we're doing right now is looking at what is the right down payment for the borrower's unique situation. So it's very dependent on how much they're putting down and what their credit score is. Excuse me. The other factor to take into consideration is that FHA rules have recently changed as well. So the private mortgage insurance has also gone down. So now people who generally would have gone with a conforming loan may now be better off in an FHA loan. So it does a little bit with structuring the loans, but generally speaking, everyone who could afford a loan before should still be able to. Those who are most able to afford it will pay a little bit more. Those who are least able to afford it will pay a little bit less.
So you don't suspect we'll see anything like we did back in 2008 when the real estate market was just going up and down?
You know, Nick, I really don't. I don't think that it's that severe right now. Again, higher credit scores will still be rewarded. It is a bit of a transition. So for those people who are looking at buying a house before, they may want to reconsider different programs if they haven't already locked themselves in. So like I said, FHA is now going to be a much more viable option for certain folks. And those that were least able to afford it before will now be able to afford it better.
And finally, when do all these changes kick in?
They actually kicked in on May 1st. And in addition to that, there's more loan level pricing adjustments coming. I believe in August, they're slated to make another adjustment that will also account for debt to income. So the idea is that they want to get people who can least afford it, they want to give them more of a break. And of course, that money has to come from somewhere. So they're going to be raising the prices on those that are most qualified.
Okay, I know we and a lot of other organizations will be following this story closely. Robert Hoff, thanks so much for your time. We appreciate it.
Thanks, Nick.